Let's see now. Dan Schaefer is with us, Schaefer Asset Management. Also with us, Steve Wood, Russell Investments Chief Market Strategist. I got both of me on either side here. Now then, I want advice for our viewers. First to you, Dan. I know what your outlook is. You've told us many times the big drop is coming, that this is a bear market. All right, our viewers, look into the camera and you tell our viewers what... Now, these are not hotshot investors with $1 billion. They're ordinary people. What should they do now?
Okay. And again, I'm going to give advice, but it doesn't mean this is what you should do for your viewers, okay? This is the cycle that I see. We're in a downdraft that will eventually end somewhere in this level or maybe a little bit lower. And then there's going to be an updraft. And that updraft, to me, is a selling opportunity. So I wouldn't be panicking today, but I would certainly be looking to get out and sell rallies. That's now the next step in the cycle turn of the markets.
Okay, I got it. That's interesting.
I did it right in the camera.
You did, and that was very specific.
Yes,
That's excellent, young man.
Thank
well
you.
done.
Thank you.
You're learning on this job. I can tell. I can tell. All right, now Stephen Wood is with me. I know that you have a different opinion.
We do.
You do not believe that we're getting into a new bear market. You don't believe that we're heading south, south, south.
Correct.
So look into the camera and you tell our viewers, ordinary people, what should they do with their money?
Well, I think what they want to do is they want to be in an actively managed portfolio. We've seen some of the issues with indexes, so that's step number one.
What's that mean, a mutual fund?
Mutual fund, actively managed, professionally managed mutual funds where you have people that can actually come in and make decisions about where to be.
What kind of mutual fund?
I think they want to be in globally diversified multi-asset. So they want to be
international fund.
International funds, and what we've been doing for the last number of quarters is we have been selling already the rallies in the U.S.
Okay.
And we've been using that to fund more into Europe, more into Asia, and just looking bond and stocks globally, taking the profits from the U.S. for the last couple of quarters to fund that.
Okay, you don't think we're in a bear market, but you do think that this volatility, the ups and downs, that stuff, you say that stays.
Clearly, I think that stays.
Why?
Well, actually, where we are right now in the last couple of weeks is normal. And we've been pushing almost 2 years of very not normal. You need almost a jeweler's loop to see the volatility for the last couple of years in U.S. equity markets. Now we're getting...
a jeweler's loop? What the devil is a jeweler's loop?
Yeah, that's right.
One of my things?
Yeah, it's been very, very small.
Okay.
But I think now what we're going back into is a more normal volatility environment. The markets pay one to take risk, and they pay one to absorb volatility. So the rates of returns that investors will probably need, meaning that a more normal up and down volatile market is reasonable to expect.
Okay. But you don't think we're heading for a big drop anytime soon?
I don't think one that will stick, because the fundamentals that you mentioned earlier are good.
Okay.
And I think they are improving. I think there's one yellow light, though, that we want to put into this. So if you look at the tax plan, the economy, but what the Fed's going to do in the response of this good news, I think is something that you need to put into your long-term strategy.
Back to Dan Schaefer. I'm interested in the big drop, which you have been forecasting for some time.
Yes.
You think it's almost upon us?
Yes.
All right. How far down do we go? Give me a number on the Dow.
Yeah, well, on Monday morning, I said we'd be at 23,800, which we are right now. The eventual move will be around to the original amount, the level on election night, 18,000 level. That's the level on the Dow that I'm looking for, to retrace all of this fluff that was built into the market. And the market predicts 6 months ahead under normal circumstances. So it's already predicted, even if the fundamentals, as Steve was talking about, get a little bit better over the next few months, they're about to turn, and that could be very dangerous, and the market's telling us that.
So we go down to 18,000?
Yeah.
By the spring, early summer of this year.
You know what, Stu, the way the market's trading, I can't tell you exactly when. I would think at least by the end of the year or early, but it may not stop there. It may bounce from there.
That's a bear market.
Okay,
That's a deep
that is a bear market.
Yeah.
Back to you, Stephen, for the last word.
Sure.
I want to know how the market closes out this afternoon. I know it's a very difficult thing to predict, but it really is. But look, I mean, are we going to have one of those last hour of trading where we go up and down and down?
I think that's reasonably that's a reasonable expectation, because what we've seen is...
Are we going, in the last hour of business, do we go sharply lower or sharply higher?
I would suspect that you probably have people getting out of positions going into the weekend.
So sharply lower?
That could be a possibility. I would say, however, you got to look longer term. And the global markets are doing better. Global economies are doing better. This is an opportunity for a disciplined investor to take short-term volatility and reposition that global portfolio. And I would advise that.
Gentlemen, thank you very much indeed. Dan Schaefer, Stephen Wood, we appreciate you being here. Difficult day, and I shouldn't have asked you to forecast the market like that, but I did. All right.